You're bleeding your total wealth right now and you don't even realize it. Your hard-earned cash is slipping straight into the government's pockets because you've ignored the warning signs. If you've worked hard for decades and managed to accumulate a total balance over $300,000 in your fund, you're the absolute #1 target for the ATO this season. It's an absolute financial tragedy to watch people throw away money, but today, you'll discover exactly how to legally rescue up to $30,000 before the upcoming 30th of June deadline hits your accounts. Remember, this is educational information only, so you must check with a qualified professional before making any massive strategy adjustments to your wealth profile. Let's look at the absolute facts of the Australian tax system. The Medicare Levy isn't just a small standard fee. It's a massive wealth destroyer for high-income earners who fail to implement proactive planning before EWFE. If your taxable income climbs past the standard threshold set by the government, the surcharge kicks in automatically. And suddenly you're facing an estimated tax bill that scales completely out of control. Most Australians over the age of 45 believe their current fund is completely optimized for efficiency, but that is a highly dangerous illusion. The ATO has established incredibly strict boundaries for this 2025 to 2026 financial year, and if you don't play exactly by the rules, you're essentially volunteering to give the government a massive tip that you cannot recover. To completely neutralize this fiscal hit nut, you must master the mechanics of concessional contributions. For this specific financial year, the annual cap has officially risen to $30,000, which gives you a remarkably powerful weapon to slash your taxable income down into a much lower marginal bracket. By implementing a highly strategic salary sacrifice arrangement through your corporate payroll department, you can seamlessly redirect your pre-tax salary straight into your chosen super fund. Instead of paying your standard marginal tax rate, which could be as high as 45% under the newly implemented Stage 3 tax bracket system, that redirected capital is only taxed at a concessional flat rate of 15% inside the safety of your fund. That's an immediate, massive, guaranteed saving for your total accumulated wealth. General information only, does not constitute personal financial, taxation, or legal advice. Think deeply about how much money that simple shift saves you over a 12-month period. It's literally the difference between funding your own ideal retirement lifestyle or funding the bureaucracy's next project. Industry funds and retail funds are never going to automatically fix these settings for you. They're perfectly content to sit back silently and let you remain trapped in their default investment options, while your hard-earned balance takes a severe hit year after year. You must grab the steering wheel yourself before the clock runs down to zero. Stop right there. Let's pause for a brief moment because this is getting serious. If you're feeling the heavy stress of this intense EWFE pressure right now, I want you to leave a comment below explaining your exact financial pain. Tell me exactly what's keeping you awake at night. Now, let's dive much deeper into the complex traps, because the reality gets significantly worse for high-income earners across Australia. If your combined taxable income and super contributions cross the $250,000 threshold, the ATO is going to hit you with the infamous and painful Division 293 tax assessment. This is a brutal extra 15% tax levied directly on your concessional contributions, meaning your hard-earned retirement savings are taxed at a total of 30% instead of the standard 15% rate. It's a punitive penalty explicitly designed by the system to claw back the benefits of building substantial wealth. If you aren't actively monitoring your overall position and total superannuation balance, you'll receive a shocking surprise assessment notice from the ATO. Months later, that completely disrupts your personal cash flow. This is precisely why choosing between industry funds and retail funds requires a deep structural analysis of your portfolio. Many corporate retail funds charge highly complex administrative fees and trailing costs that compound over time, draining your $300,000 balance completely in secret while you're busy focusing on your career. But there's an even more dangerous hazard waiting to ambush you in the final week of June. It's the critical operational danger that I call the BPAY death trap. This simple timing mistake completely destroys thousands of legitimate tax returns every single year. Most everyday investors wait until 29th June to execute their final voluntary contributions via BPAY, operating under the false assumption that as long as the cash leaves their personal bank account before midnight on the 30th of June, their tax deduction is perfectly secure. That's a completely catastrophic error. The official ATO regulations are crystal clear on this operational detail. The funds must be actually received and fully cleared by your superannuation fund before the formal close of business on 30th June. To legally qualify for the current financial year's annual cap, if your commercial banking institution takes 2 or 3 business days to process that specific BPAY transaction, your capital lands in the month of July. Suddenly, you've completely missed the strict UFI deadline. You lose the entire projected tax deduction for that financial year, and your hard-earned cash gets automatically counted against the next year's cap limits, potentially triggering severe excess contribution penalties that compound your losses. It's a logistical nightmare that catches out thousands of professional Australians every single year. You simply cannot trust standard electronic banking speeds during the frantic final week of June, because the entire Australian financial system experiences massive transaction volumes that delay clearing times. The ultimate strategic insight for maximum wealth preservation involves the tactical leverage of the carry-forward catch-up provisions. If your total superannuation balance was strictly under $500,000 on 30th June of the previous financial year, you are legally allowed to look back over the past 5 years and access any unused portions of your previous concessional caps. This brilliant strategy allows you to inject significantly more capital than the standard $30,000 limit into your fund during this current cycle. It's an extraordinary, entirely legal tax shield that can instantly wipe out an entire year's worth of Medicare Levy surcharge liabilities and drop your personal taxable income down into a substantially lower marginal tax bracket. It's the single most effective wealth management strategy utilized by the top tier of high earners in Australia to insulate their wealth before the fiscal year shuts down permanently on everyone. Don't let an outdated or passive strategy drain your retirement fund when you have the tools to prevent it. Take immediate action today to protect every single dollar you've earned. General information only, does not constitute personal financial, taxation, or legal advice. If you want to know exactly how the largest corporate funds compare on hidden administration fees and structural costs, make sure you do not miss our next crucial episode coming out this Thursday at 7 p.m. sharp. We're going to completely expose the internal fund fee structures that are quietly eating away at your retirement profits. Subscribe to Aussie's Super Secrets right now and never give the ATO an extra cent of your wealth. Disclaimer: the information provided in this video is for general educational purposes only and does not constitute financial, taxation, legal, or home loan advice. It has been prepared without taking into account personal objectives, financial situation, or needs. Before acting on any information, it is recommended to consider its appropriateness and consult with a licensed professional, such as a financial planner or tax agent. Specific results or future performance are not guaranteed. 2026 Aussie Super Secrets. All rights reserved. What part of Australia captured your heart? Tell us your story in the comments and subscribe for more adventures.